it's a long time you've had to wait and watch this manipulation carry on. But like you and I both know, it will come to an end. It always does come to an end. And I'd rather be 1,000 days early than 1 day late, is my view. So
Friday, June 25th, 2021, Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Daniel Vigario. Daniel is a qualified or licensed chartered accountant, originally from South Africa. He has worked in the City of London since 2008. And recently, you might have seen his interviews with Robert Keens of GoldSilver Pro, which is a channel I highly recommend you go and look at and subscribe to. And Daniel, he's dug deep into what's going on at the Perth Mint. So we're going to cover that a little bit. And we're also going to look at why Daniel started looking into commodities, precious metals, what led him to look at, away from the fiat currency. We have a similar background, even though I started a lot earlier than Daniel. I was in the city from 1992 to 2012. Daniel joined just before the crisis of 08. I think it was in May 2008, right, Daniel?
That's correct. The worst possible time to join banking, correct?
Yeah. So, before, I guess, let's start with that then. What led you to look into commodities and precious metals, and maybe talk to us a little bit about your background and why you're qualified to look at the Perth Mint's also financial statements?
Sure. So I think the story begins, I guess, just before I came to London. My father was a professor at the University of Natal. He was there for 20 years. And the process to become a chartered accountant in South Africa is a bit different to the UK. It's quite similar to New Zealand. It can be between a 6 to 8 year process to become qualified, of which you spend 3 years in auditing. And the other 4 years, you do an undergraduate degree and then you do an honours degree. It was in my honours year that I came back from Stellenbosch University to Natal, where my dad was, and that was around 2005. And at that time, my father was getting heavily into precious metals because he realized, and I was too young to understand, and I was sort of 23, 24, that fractional reserve banking and the currency system is a Ponzi scheme. It's stacked against you. It's a means of exchange that will lead to the loss of wealth, and he realized that early on. And I remember in class, he would always present on precious metals, especially miners, so gold fields and so on in South Africa, Anglo Gold Ashanti, and that's how I became sort of very accustomed to precious metals early on. I think on the point of being able to do analysis, because my dad lectured in managerial accounting and finance, which is one of the subjects to become a chartered accountant, that is a highly analytical set of skills that you develop. And obviously I grew up in that environment for a very long time. So pulling apart data, whether it be financial models or financial statements or, analyzing to a very, granular level is something that I've been doing for quite a long time and started off at an earlier age.
Yeah, so I guess your dad got you into, well, at least it was in your subconscious, the idea about precious metals. So I guess you got to London, I think it was in May 2008. And
Correct.
I think Lehman started collapsing in September, October.
Correct.
So it must have been an interesting time. And did you then realize, oh, my dad was right?
Yeah, so I think, arriving in the UK, what I didn't appreciate at that time was, unlike in South Africa, you can move between sectors quite easily. You can be in financial services or commerce and industry as a chartered accountant. You sort of viewed as someone with a lot of skills. But in the UK, it doesn't quite work like that. Whatever area you go into first, you get pigeonholed to a certain extent. So what happened was we came to the UK, my wife and I, in 2008. Bear Stearns had just gone down, and that was May 2008. And there weren't many jobs around, and I didn't know and understand the market that well. So you took the roles that are available, and they were generally in banking. And I got into product control on the derivatives trading desk at Barclays Capital. I remember Mr. Diamond was the head of Barcap at that time. And very shortly after I joined, we bought out Lehman Brothers. And then I left Bar Capital as an entry-level role, and I moved to Lloyd's Banking Group. And then 2008 and 2009, what I started to do was, obviously from my father, I started to read material on fractional reserve banking. So The Creature from Jekyll Island, and The Gold Cartel by Dimitri Speck. And I must have read, I don't know, between 20 and 25 books, never mind all the Mike Maloney videos, never mind all that material from Jim Rickards and all the main names that we all know. And it became really apparent to me that fractional reserve banking it creates a situation where there's a hidden tax of inflation, and no one knows about this. And if they do know about it, they're oblivious to it. And the average middle class Joe on the street doesn't understand that their money in the bank actually is a credit. It sits on the balance sheet as a liability on the bank, and the bank owns your funds. Essentially, you are accredited to the bank. And if everyone ran on the bank and wanted their cash back, there won't be any money. Why? Because the bank has lent it out already. It's got a fractional reserve of 10%. So when you understand that, and you understand that through currency creation and fractional reserve banking, it creates an increase in currency supply, which then creates increase in prices. And like Mike Maloney has said, just because something increases in price, it doesn't mean it increases in value. Price and value are completely different. And I took the decision then in 2009 to leave banking and take smaller steps to get into commodities. And I landed up in brokerage houses here in London, listed on the NASDAQ and TSX, and then got into renewable energy. And now I'm a portfolio director and CFO for a number of companies. So it's been a good journey. And I think throughout all of that, you develop a lot of different skills to do different things.
Yeah, and are you like self-employed now, and you do consultancy work?
No, I'm fully employed currently with a family office.
I see.
And the family office has, obviously, it's a multi-family office. There's lots of companies that I look after. But prior to that, I was with different startups and scale-ups. And doing that type of work after just leaving a PLC, which is a renewable energy PLC listed on the AIM here in London. So I've had lots of experience in big companies and smaller companies, and yeah.
Yeah, I mean, I started out in London in 1992. Prior to that, I worked for a small private bank in Geneva, Switzerland, for about 2.5 years. And we did everything over in Geneva at that place that I worked. Foreign exchange. I even remember they had gold positions on their books as foreign exchange. But I never really thought too much about gold. I do remember that my dad bought some gold in the mid to late 80s, and he was never happy because during that time, gold didn't do anything. I think it went, he bought it around 400, went below 400. And then when it got back a few years later to where he bought it, he sold it. So that's all the idea I had about gold was how my dad was frustrated about it. But I guess he didn't really know the history, the monetary history. And it took me till 2002 to look into gold, because I decided to buy a few gold Krugerrands, 1 ounce Krugerrands, because they're still really popular back then. Because in the 70s, it was like the major bullion coin. And then once you buy your first gold coin and you hold it, I mean, it's really something that you can't describe. And then I started looking because I was already interested in the Austrian school, and I started reading and reading. And by being at the desk every day looking at the markets, even though my job was in the futures and options bond market and interest rates, I was following gold, and I saw a lot of patterns right away. You know, like on the comex regular hour open, gold would drop. After the PM fix in London at around 3 o'clock, it would drop. And having traded bond markets for years, I never saw repeating patterns like that. So that's when I started looking into the manipulation. When did you notice that there's something that seemed to be something not really, right with the...
The minute I read Dimitri Speck's book on the Gold Cartel, and it was actually recommended by Eric Sprott on one of his shows. And Eric was quite he was very vocal on a lot of the non-mainstream sites coming on, doing video interviews, and he recommended Dimitri Speck. And I read that book, and what you've just described in terms of certain times of the day, so after London Fix or before the other markets that trade, gold or silver would just tumble. It would be really big down candlesticks. And Dimitri Speck did that same analysis, but over 30 or 40 years, and it's phenomenal. Like, what he discovered was this is the most rigged market on the planet, and for a good reason. It's rigged.
I haven't read Dimitri Speck, but I should. Is he the guy who did the analysis that, let's say, if you bought gold on the open of the regular hours in New York and then sold it at the close, that you'd lose money, even though gold was in a bull market?
Yeah. It was not a very long book, but it's the chart analysis that he does is unbelievable. And Eric Spock recommended that book. It was a really good read, and that's when I knew it was manipulated. Before that, with the gold, with the creature from Jekyll Island, I understood how fractional reserve banking works. I mean, before 1913, there was virtually no current tax. No one paid tax. You paid local tax, but there was no government tax. Why? Because the currency wasn't debt at that time. There was the gold, a classical gold standard. So before 1913. So, there's a lot. I mean, Mark Maloney touches on all of this. That there's a very good reason why, quote unquote, we're living in slavery, which is the monetary slavery system we're living in, and that's why precious metals are so manipulated. Heavily.
Yeah, I think they need a tax base to create demand for their fiat currency, because if you didn't have to pay tax, you'd probably want to switch your fiat currency for real money. So people are always trying to get fiat currency. I think it's a way and you look at the third world countries, or even Italy, countries that don't have a very good tax tax raking institution, or HMRC, whatever. They usually have very high inflation because they're not able to like put a little, I would say that the currencies, even though they've gone down a lot, the fiat currencies, they are kind of backed by our taxes. Would you agree?
I would agree. The best nudge I can give, as Mark Maloney has said before, we all know that currency is created out of thin air by a reserve bank. The Treasury issues a bond, that they get the currency from the reserve bank. That currency goes into circulation. So the question is this: if the first unit of currency, so the first dollar, is created out of thin air, and it's a bond that essentially created that currency, well, how is the next unit of currency created to pay the interest? Yeah. Because it has to come from out of thin air as well. So
for more debt, yeah.
That's the Ponzi scheme. The Ponzi scheme is, if everyone understood that, currency is created out of thin air, fractional reserve banking multiplies that effect, but to pay off the debt, to pay off the interest and the debt, it's impossible, because you need to create more currency to pay that off, and that's why housing prices have gone through the roof. I don't believe in the thesis that housing values have gone up because there's a massive demand in London. There's a demand, obviously. There's always going to be a demand in London property, but housing prices have gone up to the point where I can't own property myself, because I don't want to get into debt the next 30 to 40 years. And why has it gone up? Because of printing of currency and fractional reserve banking. I was just going to say, and my view one day would be to exchange precious metals for a home. I hope that there'll come the day that this currency reset will happen. It'll be an event in history soon. I hope. I've waited 12 years for it. That you would be able to use precious metals to buy other assets.
Yeah, I've always found it strange, like in the mainstream, in the news here in the UK, they talk about the housing market. They give loads of reasons why house prices are going up, why rent is going up. They say, oh, it's a lot of immigrants. There's not enough houses, but they never say, oh, it's because, the mortgage rates are so low. And people can the best thing that could happen to the real estate market is for rates to go up to 5%, 6%, 7%, which is really if you look back the last 250 years, that's the average long-term rate. And then house prices would collapse, and then you could go and buy your house. but unfortunately, they've people have borrowed so much to buy their houses that politically they can't let it happen. You've seen, like, since last year, how they've been desperate to keep their house prices up. They've even exempted some houses from the stamp duty. But yeah, I've done a bit of work as to the nationwide average house price to gold ratio. And I'm not too sure where we are right now. I think we're over 100, but it's been as low as like 60, I think. And I think it could go a lot lower. The UK average house price, which of course is a lot lower than the average London house price. But with that, could you tell the viewers about the Perth Mint and why you started looking into that?
Sure. So what happened was, as I said on the GoldSilver Pros interview before the last one, so part 3, John Adams came on the scene beginning mid of last year, I think, or maybe towards the end of 2020. I'd never heard of John Adams before, and John, obviously based in Sydney, Australia, came online through Twitter and other mediums of communication, and he was very outspoken about the Perth Mint, but also about these topics, about a broad set of topics, and fractional reserve banking and governments and control of governments and the virus and all these different things. But mainly, he was contacted by some customers from the Perth Mint that said that they couldn't or weren't able to convert the unallocated holdings, the precious metals holdings, into allocated form, and or take delivery. So it was a combination of the two. It was either converting to allocated, holding with the Perth Mint, or converting to allocated and taking delivery. And the Perth Mint would either say no, they can't do it, and this is all documented on Twitter and other places, or they said it would take 20, 30 days for that to happen. John never, he was very vocal for a number of weeks on this, and he was the lone voice for a long time. And then what happened was the same thing was happening with Kitco. So John repeated that. He was getting contacted by customers. This is anecdotal evidence, so emails and correspondence from customers saying the same thing's happening with Kitco. And John repeated the same strategy. And then what happened was he got sued by Kitco. And it was at that point that I realized, hang on a second, he's on his own. I have, not just me, there's lots of other chartered accountants in the world, but I have the skills to work out whether John is essentially telling the truth or whether he's not. And I thought the only place to find out would be to look at the Perth Mint's financial statements, because that's the truth, right? You can't get away from the financial statements. And depending on how they are put together and drafted and what accounting standards they're using and what have you, you can pull them apart and you can work out what's going on. And what I've discovered early on was that they are running a fractional reserve system, a precious metal system, like a bank. You give your cash to the bank lends it out. The Perth Mint's doing the same thing, not to the same extent as a bank. So a bank's got a 10% ratio. I would say the Perth Mint's got maybe a 70 to 80% ratio, so a lot higher. But the difference is it's precious metals, it's rare. So and also there's other risks that you're putting your customers in, which I've discussed before on GoldSilver Pro. So early on, this is now in March of this year, I discovered this. I did my analysis on the spreadsheets. I then contacted John. I didn't hear back from John. Obviously, he was very busy with Kitco. I then contacted TFMR, so that's Craig Hemke. I said, Craig, I've tried to contact John. I've got this information. I think we should look at it. Craig then tried to get hold of John again. John was unresponsive again, very busy with his suit. And then I was watching a GoldSilver Pros video in April, May, and Rob mentioned he was an auditor and he likes doing these sorts of things. This is the guy. I need to contact Rob. So I contacted Rob. He took my material. He did 2 videos on it, and he did a great job. And I think what happened was I was very privileged and honored to be on his show, and I thank Rob very much for that opportunity. And Rob did two videos, and then the Perth Mint CEO came out and responded. My mistake. A consultant for the Perth Mint came out, responded to Rob's second video, and I said to Rob, listen, I think I need to come on your show because we're missing some things here in the technicalities, because Rob's not an accountant and we need that explanation. So I came on and did the third video, the long one. And I found some more things that I discovered, and I did some debits and credit analysis to unwind what they'd done to work out what actually happened. So I knew they're running a fractional reserve system. I knew that they were liquid. I knew all those things, but I didn't know how it got to that point. You know, what did they do over the last 3 years to get them to the position that they're in? And I worked it out. And we presented that on the third part. Then the CEO of the Perth Mint came on and did a very lengthy interview on Kitco, which is quite unusual. The presenter on Kitco, Dave Lynn, he did a great job to the extent that he could in asking the right questions. And then I contacted Rob again. I said, Rob, look, that interview, there was a lot of issues with it, and we need to set the record straight for the benefit of the customers of the Perth Mint, but also because I've got this deep desire that if anyone is involved in potentially manipulating precious metals, that truth should come to light. And I'm not saying I can't prove the Perth Mint is directly involved in that, but what I can say is that there's enough evidence to suggest that they are participating in some form of precious metals manipulation on exchanges or in the market to some extent. And we proved that in the fourth video. And I found that the fourth video was a lot shorter, and really, I thought it was a good presentation of a closure as to what we think is going on. And then from that, obviously, the robbers, John Adams, should I say, has contacted a number of very senior people in Australia, premiers, and as well as the Auditor General. They've responded to John saying that they'll take this evidence and look at the audit for 2021, which is fantastic. And we hope that something will come out of this. So whether customers realize what's going on and make their own decision, or whether this potentially unwinds itself and the Perth Mint sorts out their balance sheet, you know. And
and I will put all those those videos you talked about in the description of this interview, and also up in the cards of people. I recommend people watch them, the viewers watch them. What I actually got from your interviews, and also from listening to the consultants to the Perth Mint and to the CEO, is that it seems like the Perth Mint is become, aside from a mint, which actually has really nice products. I bought silver coins from the Perth Mint years ago for my daughter when she was younger. You know, they do really nice stuff. I don't have a complaint about that, but it seems like they, since this consultant who used to work for Deutsche Bank in commodities, I think he was also involved in creating the GLD ETF. It looks like, looking at your video, when you looked at the data, that prior to 2019, they didn't have like a short position. And it was since that guy came on board that they started like lending out the gold. And the interesting thing that the CEO of the Perth Mint said with David Lynn, and I have to say he seemed quite nervous, the CEO. He had a difficult time, seemed to be a little confused, but he did say that the people that they lend the gold to, they're S&P rated. I mean, can you elaborate on that a little bit?
Sure. So I'll just give a brief summary, as I think it's really important to use the right terminology. So number one, when you're looking at the Perth Mint's liquidity position, so their total current assets and their total current liabilities, which is a very common ratio. It's called the current ratio, right? What is the ratio between your current assets and your current liabilities? And before 2018, the Perth Mint was always in a liquid position. Their total current assets was greater than total current liabilities. So in other words, the current liabilities is made up primarily of their lease gold, which is far less in 2017 and before that, but their customer accounts, which is the liability side of the balance sheet, and the asset side of the balance sheet is the inventory, cash, and so on. There is some current assets and current liabilities in between there, but prior to 2018, they were always liquid. In addition, the Perth Mint was never in a net short position on their total unallocated inventory on their balance sheet and their total customer accounts liability on their balance sheet. It was always in a positive position before 2018. From 2018 onwards, they started changing their balance sheet. So what did they do? They started leasing metal, which is, in my view, quite unusual for a mint. I mean, essentially a mint should have enough cash in their balance sheet or investment to go buy metal, refine it, sell it, and then recycle, right? That's what a mint does. They started leasing metal. Now, leased metal is exactly the same as customer account metal because it sits on the liability side of the balance sheet. And more important, you have to settle that obligation in metal. That's the key thing, not in cash, in metal, both the leased and the customer accounts. From 2018 onwards, the Perth Mint's position between inventory unallocated and total debt, being customer accounts and lease, it started going to short position. In other words, the inventory was less than the liabilities. That's an issue for Perth Mint customers because although the unallocated asset is greater than just the customer liability, well, the customers are also pooled with lessors and you need to settle in metal. So that's a huge problem. The Perth Mint never had that position before 2017. So the question then arose, well, where did the metal go? I mean, how did the short position arise? How did that happen? And through the journal entries and analysis that I did, it happened for two reasons. One, to a lesser extent, the fact that the Perth Mint took unallocated metal through my analysis into the EFT. So they seeded the EFT with some unallocated metal to the tune of 110 million, which was a portion of that receivables at fair value that I've mentioned in the video, the difference between inventory and total liabilities. And then the rest of it, so the other 700 to 800 million, was this sale of metal. And if you look on their financials, like I mentioned in the video, the Perth Mint actually sold metal to a counterparty or counterparties, which created a receivable at fair value on their balance sheet. Now, as you and I both know, if a business sells something, they sell it on a 30-day payment terms, or even less if it's precious metals. But this receivable at fair value, which is 900 million on their balance sheet, which is the difference between inventory and total obligations, doesn't have an end date. Their notes say so. It's held at fair value. In other words, the price changes over time, which is really unusual. Why would you have a massive receivable outstanding for a long period of time? So that raised significant suspicion. So they came out with that's after the third video. They came out with the RNS and they said, sorry, after the second video, they came out with the RNS and said, look, we absolutely square because that receivable we count as inventory. And I said, no, this is the third video. I said, no, you can't count it as inventory because that receivable is actually cash. You have sold metal, you have cash that's coming back to you. That's what it is. And through the second and third video, we proved that the Perth Mint customers and the lessors are at a short position of 900 million, and they're now exposed to price risk on the 900 plus counterparty risk because that's not metal. That is an obligation coming from a counterparty back to the Perth Mint, but also they're exposed to the situation where if there's a run on precious metals, the Perth Mint could potentially not be able to liquidate that receivable, buy metal back in the market, and then replenish the unallocated accounts and then settle everyone out if they wanted physical. That's a real issue. Yeah,
that's probably what might have happened a little bit a few months ago when people were contacting John Adams and they couldn't get.
Exactly. Now, I don't know if that 900 million as of 2020 June has grown to double the size. I have no idea. I'll only know that in 3 months' time. But what I do know is that the Perth Mint changed their balance sheet. They started doing things with, so my point is, they started doing things with the unallocated metal that they shouldn't really be doing. And it's exposing their customers and their lessors to significant risk. And the fallback of the CEO as well, we're backed by the Western Australian government. Well, how would the Western Australian taxpayers feel about that if there was any one of these situations arising, not able to get precious metals in the market to replenish or, a liquidation event or whatever the case may be, they'll have to backstop the Perth Mint. So this receivable created the short position, which created the fractional reserve position, and then they're charging interest on the receivable. And that is highly unusual. The question is, what customer are you selling to that can afford to pay for interest? I mean, if you go to Andy Schickman or these big brokers out there, big dealers, should I say, out there, they can't afford to pay interest on their precious metals acquisitions. So that was the end of the third video. That rose significant suspicion for both Rob and I. We thought, who's the counterparty? And then the bombshell came. The CEO said the counterparty has S&P credit rating. That's who the counterparty, or that's who the counterparty or counterparties are. Well, now that narrows down the list quite significantly, because what counterparty has S&P credit rating? It's not a dealer, it's not a retail customer, it's either a bullion bank or it's an exchange.
I would say it's the bullion banks, because an exchange itself doesn't really participate in the market. It's the people that trade on the exchanges, right?
Yeah, correct. I don't know as much as Craig Hemke and Rob Keynes as far as whether the exchange would seek to essentially increase their metals holdings directly with the counterparty. As you said, they may go by JP Morgan or they may go by someone else. But in my view, the Perth Mint has taken customer unallocated metal and they've sold it to a big counterparty. So that metal is not gone. It's gone. Now, if that balance, which it is, that balance grew from 607 million in 2018 to down to 523 in 2019, then back up to 842 million in 2020, this receivable. And if we know what's happened in the market now over the last year with all these pressures, that receivable could have grown even more. I don't know. But I can't wait to see the 2021 results. And I think all in all, what I'm trying to say is that there's risk that the customers are now exposed to that they were never exposed to before. So counterparty risk with the Perth Mint itself, liquidity, counterparty risk with the Perth Mint's customer they're sold to for the receivable. The Perth Mint has become a bank. They've changed their balance sheet. They're charging interest. And they never did that before. So like you said, I've got no issue with the Perth Mint prior to 2018. They sold good products, they ran a good balance sheet, it was a good operation. Richard Hayes has been there for 18 years. It's a good operation until 2018 and then onwards.
Yeah, you know, the Royal Mint, I spoke to them earlier this year because of the silver squeeze, because they have a few products. I think they call it DigiGold and DigiSilver. And basically you can buy gold and silver and I think it's unallocated because there's another product, which is you buy the real physical gold and silver and ask them to store it for you. So I'm wondering, you know, if there are other mints that are doing this. I think maybe, I don't know if we'd be able to get data from the Royal Mint. And but what it shows me is that the bullion banks, maybe the ETFs are getting desperate and they had to resort to doing this kind of stuff. It just seems like the consultant as well. Did he start in 2018 consulting?
I believe he started it in 2019. That's when 19. The ETF was created. But yeah, this receivable started in 2018 year end.
Yeah,
and the leasing, the gold leasing has been there. I would say it was 43 million in 2013. 344 million in 2014, and then the leasing started to increase, 675 million in 2015, almost $1 billion in 2016. So why are they leasing? You know, this is all connected. You know, why are they leasing?
Yeah,
and it's causing a strain on their balance sheet.
Yeah, because for the viewers, you know, when let's say the bullion banks, when they manipulate the markets. Like be it in the futures or be it in the unallocated bullion market in London, they have to lease that gold. It's like, you know, when you short a stock, you borrow the stock and you sell it. So they're doing the same thing. And I think unallocated gold as well. London, from what I know, you can rehypothecate as many times as you want. I think crazy. New York, there's a limit of two or three. And that's why there's so many international banks in London, because they can do this kind of stuff. But yeah, and oh, another thing I wanted to talk about, maybe you saw it as well. I started following Rafi Farber. I don't know if you heard of him, the endgame investor. And I interviewed him in November last year, and then he started sending me his newsletter. And one of his subscribers pointed out that the Perth Mint was selling its ETF, gold ETF, to Goldman Sachs. I think at the end of last year or beginning of this year. That seems pretty interesting as well, that Goldman Sachs has taken over this ETF. You have to wonder whether Goldman Sachs is using the ETF, you know, to lease gold into the market.
So that transaction will be quite interesting to see how that plays out, because from what I've seen, the Perth Mint used unallocated metals to seed the ETF. So if you had to sell the ETF off the balance sheet of the Perth Mint, what then happens is the Perth Mint would then get remunerated for their interest in the ETF, which is equal to the precious metals. And I would love to know is, when they do get remunerated, are they going to replenish the unallocated metal again, or are they going to do something else with that cash? And I don't know. But that question came up, I think, briefly in the part 4 of our videos. As I said, the ETF is quite a small number in comparison to this receivable at fair value. The ETF, it is what it is. It's tiny, but the receivable at fair value is the real elephant in the room.
The thing is, if you look at unallocated, it doesn't even guarantee that you're going to get any gold, physical gold, right? When you own unallocated. So the fact that they're even leveraging and lending unallocated they're not even lending gold. They're just like.
Effectively, so the receivable at fair value is a quote unquote, it behaves like a loan. It behaves like a loan because they're taking interest on it. So that's the key thing. So think about the rehypothecation. You've got a bullion bank or the Australian government leasing metal to the Perth Mint, liability in the Perth Mint's balance sheet. So that's, ownership 1. Perth Mint takes that lease metal, puts it in unallocated. They then sell it to a counterparty, which creates a receivable at fair value. That's ownership 2. That metal then goes to whatever counterparty, and that gets sold into the market. That's ownership 3.
It's like an inverted pyramid with a little bit of metal here, and
that's why I'm so passionate about this, because I'm so sick and tired of the manipulation. And if I can play a small role in bringing to light something, I'll do that. But it's all over the place. I mean, it's just all over the place.
Yeah, and I've been looking at this for years, as I told you, since 02, 03. And it's not just the precious metals. That kind of leasing goes on in everything. The whole system is a house of cards. And unfortunately, I think the day that the precious metals, gold and silver scheme gets exposed and things, everything hits the fan, I think the whole monetary financial system will go along with it. What do you think?
I agree with you. I think my only sort of encouragement I have to those out there that are, earning a living, they're basically saving a little bit, just above break even, which is pretty much, I would say, 90% of the world population is in that position where they're just working long hours, both husband and wife, and they're trying to survive. My greatest encouragement is that you should be saving. You shouldn't be saving in currency, and you should be saving in something that is significantly undervalued. So let me ask you this question, Mario. What asset or thing or commodity, other than microchips, is priced at a value lower today than it was in 1980?
Yeah, silver.
Silver's the only thing. Well, how many uses does silver have? Over 10,000. It's got thousands of uses. And I'm not just throwing that number out. I've read books on this. Okay, and with this clean energy revolution coming, silver is used in everything. You and I are communicating right now using silver. So my encouragement to anyone is, like Michael Maloney said, 1 ounce of silver is worth 10 days of hard human labor. That's Roman soldier human labor, which is equivalent to about a month of our human labor. So when this thing blows up, and Jim Ricketts and others have put out numbers there, but if you had to bring the currency, total currency quantity in line with the value of gold as it was in 1980, you're looking at a price of gold between $40,000 and $80,000 an ounce, which sounds ridiculous, but if Bitcoin can get to over 100, gold can certainly get to that value. So then the question is, well, what is the ratio of gold to silver? As we know, it's about 8 to 10 ratio of silver to gold. Well, a ratio of 10 at 40,000 is 4,000 silver. So you buy silver at 25, and what you're paying for a silver coin, you've just paid for a lunch in London. How many of those coins do you need to put a deposit down on a home one day? But I think that you'll be able to exchange a monster box of 500 ounces for a medium-sized family home, is my view. But I've had that view for a long time. like Craig Hemke, he gets a bit frustrated on his podcast because it's a long time you've had to wait and watch this manipulation carry on.
Yeah, I'm not even sure if the price will, I don't think it will matter what the price is, if it's 50,000 gold or 4,000 silver. I don't think people will accept paper, but they will recognize the value of silver and gold and say, oh yeah, I need to sell this. I will take 2 of these silver ounces for that. That's how it's going to work.
Yeah.
Because I think the system will be so screwed up that, the prices won't mean anything. And it's funny because I bought a book the other day and I just received it. It's called The Story of Silver, How the White Metal Shaped America and the Modern World. It's by a guy actually called William Silber, which is silver in German. I just started reading and it's amazing. You just talked about silver being undervalued. And in 1792, when Alexander Hamilton, the first Secretary of the Treasury, devised the monetary system as a bimetallic one, 1 ounce of silver was priced at $1.29. And last March, the price of silver got down to 11. That was like 230 years later. I mean, I agree with you. It's very undervalued.
I think, Mario, that this whole, it's a broader topic, but I think the whole thing is connected, in my view. This whole COVID virus, control of our society, the control of the monetary system, movement into debt, pushing people into a situation where you're reliant on the government. All these things are all connected. This is not happening by chance. This is all connected. And as a Christian, I know what the end game is. I know what the end is. So the end of the story is known, and there will be judgment one day. But I think before you get to that point, if you want to protect yourself and your family, the best advice, and what I do personally, is try not to own property, try rent, accumulate as much physical precious metals as you can, and protect yourself as best you can. Stay out of debt, stay out of risk, and one day the train will come in, and you'll be safer than a lot of others around you, and you'll be able to help your family too and help those in need. So that's what I'm trying to do, because I'm the wrong generation. I came to the UK when free money had already run about 8 years. It was just the wrong time, and I'm in that generation where that's the only thing you can do.
Yeah, and I think the what we see with the unallocated market, if you want to call it, or the spot market, how they manipulate it, I think it's just the powers that be trying to keep the general public away from, discouraging them from getting into gold and silver. It is frustrating, but I think people need to be patient and make sure that they buy as much as they can, but also not to overstretch yourself, because if you need the funds, you might have to sell it, and then you lose a bit of fiat doing that. So yeah, make sure. Also, dollar cost average, I think, is a good thing. I try to buy gold or silver, even though buying gold now is harder and harder. If I have some extra fiat currency at the end of the month, I'll buy a little bit.
I learned that lesson the hard way. I've dollar costing averaging. I can't recommend it enough. I bought silver a little bit at 20, and then I bought it at 40 in 2009. And then I had a dollar cost average down again. So my average is about 25, but you're absolutely right. Like, don't go all in, just buy it slowly, and stack slowly. Be slow.
Yeah, it's just like saving money. All right, Daniel, it was great having you on my channel. And any last words for the viewers? Or
I think in the world we live in today, just try not to get discouraged. Try not to be a sheep and get caught up in what's going on around you. Pay attention to the truth of the Word of God. Pay attention to what people are doing in the banking system, and do your best to protect yourself, because the things aren't going to get easier, and one needs to do the best one can for their family and themselves. That's my advice.
That's great advice. Thank you very much, and have a great weekend.
Thank you. Thanks, Mario. Cheers.